Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So this week is a bit specific because it stands under the sign of the bond market. Initially we thought that problems are coming from the Japan. So yesterday in the Telegram we have put the post on recent auction on Japanese bonds, and it was really awful results. Haven't seen since the 1987. So it's really poor demand. Yield has jumped to the 3.5% on the long-term Japanese bonds, so this haven't seen for decades such a level, and this is not the it's not the limit yet. So with the tendency that now stands there, it will keep going. So, and Japan behaves like nothing has happened. But yesterday we have the same stuff, but now in the United States. So recently was the auction on 30-year bonds, or in 20-year bonds, and it also was really poor result with the low demand and jumping on the yield. So in fact, you could see what is happening here, and that just confirms what I said yesterday. Those of you who watched our video yesterday, there we talked about this, why actually we see the rising of the yields on the, here is the particular chart of the 10-year bonds, but this same picture on any long-term bond. Simultaneously, you could see the drop of the dollar index. The explanation is very simple. This is sell-off in United States assets. As I suggested, this is because of the downgrading. Because if previously at least the Moody's was keeping highest rate, now we have no agency that appointed highest rates to the United States. It means that currently big pension funds and other funds, those who have to invest in AAA assets, have no even theoretical chances to buy United States assets, and they have to out because it doesn't correspond to their investment policy. That might become the reason, additional to other stuff. And you can see what's happening. Yields is rising, showing the increasing the risk and increasing the premium that investors start demanding for the owning United States debt. So you can see what has happened recently. Market has jumped for almost 1 decimal point in the yield. It's very much. So if we translate it by the duration in the price movement, it will be approximately somewhere around 0.5% in a real price change. So it's really big change for 10-year bonds. And currently, once again, we do not see any reaction on the dollar. It was, as it was at the bottom, it stands at the bottom. This is really a bad thing for the dollar and for the United States in general. So correspondingly, by taking a look at the euro currency, what we have, yes, here we do not see yet that action seems like really fast, something of this kind. But with this fundamental background, chances that market will keep going higher stand significant. And even based on the technical picture here, you could see that the CD leg here much faster than AB. We have some acceleration. Yes, it will not happen really fast, but at some point, market could keep going to the 112 area, sorry, 120 area, where the actual XOP stands of this. It is not really it's not short term, it probably will happen longer term tendency, but currently this scenario has not been vanished yet, so it is valid. For now, if on the intraday charts, it seems that the chances of retracement still exist, but here I like very much the one thing. So take a look how market performs after it has completed the OP target. We do not have any drop. Market is forming tight consolidation around the OP. This is bullish sign. So it means that any attempt to show the retracement, you can see that a lot of short positions have been opened here, so you can see that traders trying to trigger a retracement. They spiked up, suggesting that bears are stepping in on this area, but they can't just press it down and stopped. And any sell-off is buying out by the new traders are stepping in. So this type of action suggests that of the existence sufficient bullish power, and the consolidation usually suggests a possible upper continuation. Here also the one thing that we could keep an eye on is a possible bullish grabber inside of this range. Whether it will be formed or not, difficult to say, but if it will be formed, probably it also might become important part of the overall tendency, overall strategy. Maybe not this candle, but next candle. Anyway, market now stands very close to the MACD line, so it definitely makes sense to watch for this pattern inside of this consolidation. By looking at the hourly chart, here, what we could say, you could see this same consolidation here. I wouldn't say that retracement is impossible already. So it will be direct, straightforward continuation. It might be, but currently we also can't exclude the retracement. So here's, you will have to make the decision. Either you wait for a pullback. We talked about these two levels. So 1288 and now it's 1245 approximately. It's confidence support. It's probably both are great. Hardly we should get deeper retracement. In this case, market will erase the whole rally that has happened recently, and this will be not good sign. But in general, these two levels are acceptable for a possible pullback. Otherwise, another option that exists here, you could split the position. So for instance, you could take inside of this consolidation minor part of your trading lot, say 20%, and see what will happen. So that's the common thing that we discussed every time. I'm talking about this every time, but somehow traders very rare use this approach. The accumulation of the position when you are sure with the direction, it's really good tool. By the result, you're getting an average price with a very, very good level for possible upper continuation. So that's choices up to you. So you have to make the decision by yourself, depending on your trading style, your mentality, what you like more, how you usually prefer to trade. So, but currently at this point, I wouldn't consider any shorts and watch for current situation. Market stands around the OP, it has broken support area, and actually chances that it will reach the XOP around 1450, challenging the 1380 fib level, now seems really high. So that's probably could happen. Another actually point in favor of the possible retracement is the gut steeple to sell. We already talked about this. So currently I would say that chances for upward action out of the flag and retracement chances approximately equal. So that's probably all from me for now. See you next time.